Sorry, folks, about being a little bit late. I'm looking for the memo. Like, there might be this memo out on Wall Street or something that we're going to have a soft CPI number. I know a lot of you think it's because something that the Bank of England did gave the market a little pop. But truth of the matter, they faded that sell-off close. They've been buying all morning. Here we are, up 36 handles going into the number. Good earnings. What's going on? The problem is, this kind of reminds me of the last report. We are rallying hard into the CPI report. We know what happened. Let's talk about it with Triple D and Mitch. Let's roll.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, folks, numbers speak for themselves. We're up 38 handles, 36, 26 and a half, knocking on the door of yesterday's high. Support is support until it's taken out, just under 3,600. The buck is down, helping things out, down 53 cents, 112.70. TLT trying to get off the bottom, up 47 cents, 100.82. Crude hanging out in the 87 handle, up 44 cents, 87.71. Gold finding support, up 670, 1684.30. Silver holding 19, up 25 cents, 19.19. Bitcoin not participating in the rally, down 400 at 18,690. And Ethereum futures, they're down 56 bucks at 12.38. Let's bring in Triple D and Mitch. And Triple D, do you have, like, on the floor? We did some floor talk yesterday, but like, when they really didn't know where the market was going and they couldn't get the prints, they would just put fast, 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 and then they would show a print.
Fast market.
Are you in a fast market?
Yeah, very fast. It is chopping around. We are bouncing around. We are up and down, but we are mostly up. Kind of makes sense. Would you want to be short into this report, Mr. Elkanin?
No, I don't. I've been trying to hang on to this non-recession theory for about a year, and things aren't that bad, and it hasn't come to fruition now. But we got some earnings. I mean, the earnings really what dictates the markets. But besides being long in the long-term portfolio, just like everybody else, cash, some cash aside too. Excuse me. I mean, if we start to go north, there's not much resistance up here. We know where support is, right? We know what needs to hold. But on the upside, I mean, things could get real silly. The upside it's just evidenced here a little bit ago, right?
Well, there's a lot to think about here, but again, I'm just going to bring it back. I would not want to be short in this report, so it's not surprising that we see strength into these reports. Same thing last time, because if you're short, you're like, nah, I don't have the guts to take it through. I'll take the profits. I mean, we're sitting at the lows. We were sitting at the lows on the SPY. So you're getting the whole thing. So would you want to risk those profits going into this? So it's not surprising that we see strength ahead of it. Now, again, there's some stuff happening in Europe or in England with the pound being up. That's all helping markets too. But it's not surprising that you see strength ahead of this report. Again, at 8:30, it's coin flip territory. I mean, I'm going to just lay out the scenarios again. The market wants to see a 7 handle. The market sees a 7 handle. Katie bar the door to the upside because they're going to rip them. The market sees 0.1 better. It might not be enough wishy-washy. Anything even or hot, I think the market gets hammered again. So those are the scenarios that I'm laying out. That's how I'm going to approach it. This number is all that matters. Nobody knows what it's going to be. You can speculate. The market may be speculating that, hey, we may see a 7 handle. That's all that matters.
Yeah, the question is, no one wanted to be short, but did anyone want to be long? That's the hard
Apparently
part.
So. Apparently a few people want to be long. I don't have the guts, so I'm going in market neutral. I'm still leaning, and I was wrong last time, I'm kind of leaning in my thought process that maybe we could roar a rally out of here, but I was wrong with that with the jobs. Could be wrong here again on that. So I'm not trading that. I'm trading market neutral, staying as neutral as I can right now, and going to use the information at 8:30 to now get positioned for the next few weeks. That's the way I'm pushing it.
It's going to be a tough report. I did throw up a poll in the chat, so you guys go ahead and give your opinion over or under the 8.1. Of course, that's the estimate that we have. Prior, it was 8.3. And of course, Dennis mentioning there, will we get to the 7 handle? Definitely something to look out for. What do you feel about 7s, or what will actually shake up this market, Joel? Is there a number you think?
I'll go with the consensus here. 7,
Okay.
7, 8, 7, 9, something like that. But just one thing I did before we move on to the earnings real quick, because we got Raghee at 8:15. I did see an interesting tweet yesterday, Dennis, and it's from a guy that you follow.
Yeah.
And it was a longer term tweet, and it showed market bottoms, and it showed some crazy volume at the bottom. So, that's, people piling in on the long side. The value's been pretty steady. Maybe today it will be, the big volume day, on the upside. That would obviously be the key here. But I think you're right, man. I think that 7.9, 7.8, 7.5, it would go crazy.
7.5 crazy.
Yeah.
7.9 goes crazy, I think.
Okay.
They want to see it light. So again, we can use whatever technical indicator we want going into this: volume, charts, price, CPI numbers. All that matters, folks.
It's gonna be in line.
All that matters,
just
and that equals a lot of chop, because people won't know how to interpret it. Well, it wasn't hot, but we are sitting at the lows that all priced in. It's not bad, in line. Anyways, they want to see your t-shirt. I wore this for good luck today. I need the good luck. I wear it about once a month. This is my Joel Elconin t-shirt. When I need luck, I wear this t-shirt. I need a lot of luck today, and I need a lot of quickness.
The only other person I know that wears that shirt is Lisa. I don't think there are any.
Does she have it too?
Yeah, she does.
Spencer sent out a bunch of them. It's an awesome t-shirt.
They sent me a large. How with these guns? How am I going to fit into a large?
Yeah.
Oh, you better not put that in the dryer, Dennis.
XL.
Man, look at.
All right, let's do some earnings, Mitch, because we got Raghee. Let's do some earnings.
All right, let's go towards the earnings stocks. First one we'll talk about, of course, let's do the biggest one, Taiwan Semiconductor here. EPS at $1.79, beating the estimate of $1.41. Sales at $20.23 billion, beating the $19.91 billion. They see Q4 revenue at $19.9 billion to a high end of $20.7 billion versus the $19.76 billion estimate. They also clocked 36% revenue growth in Q3, led by 5 nanometer tech and slash CapEx by 10%.
Oh, Joel.
This is a hard one.
Tough chart.
I mean, the stock's been killed.
I don't want a single piece of this.
There's
stock.
an invasion worry here too. Don't kid yourself. It's getting hurt more than some of the other chips, even although all the chips have been beat. But there's an invasion worry here. What happens if China invades Taiwan? What happens to Taiwan Semiconductor? So, I mean, it's not surprising. This is something I absolutely did not want to own at 85 or 80 or 75. At a certain point in time, is it all priced in? Not an invasion, I'll tell you that. If we don't, the chips are really massacred. I mean, you can look at all of them. There is some value in the chips here now. So you get a relief pop. But again, we're going to say on all of these earnings, the only thing that matters is 8:30. I mean, it's the only thing that matters. We're going to go through 6 or 7 of these earnings reports fairly quickly. They're all up. That's the good news. We can just probably group them all together. All of the stocks, the major companies that reported here this morning, we can just go through them. PGR is up. It shows red, but it's bid up. TSM, up. We just did that one. Fastenal, nuts and bolts of the market, up $1. Delta, earnings weren't great, but they said some good stuff. They said that they're going to hit that $7 target, so it's up. Walgreens Boots, it's up. WBA. BlackRock, it's up $5. Domino's Pizza is up 8%. It's killing it. Everybody's eating pizza here now. INFY, another one, Overseas, it's up too. So every single stock that reported this morning is up. But does that continue after 8:30? That is to be determined.
The TSM, a lot's priced in, right? Because it's traded. I'd say take out the pre-market high. You got a gap to fill up to 67.01. Currently trading at 65.88. The Delta one is interesting, and I'm just going to stick with the number I gave earlier in the week to really be confident that this is going. You just got to put 31 in the rearview mirror. You knocked on the door a couple times of 31 the other day when American Airlines gave some good news. You popped there this morning, but that's just still a major stumbling block. Bears are still in control as long as it stays under 31. Fasten all the nuts and bolts of the economy. Wow, 4 days. TradeTheRange.com. That's breaking out. Let's see what this really nothing up till you get to 48. So I don't know if you guys. Oh, Domino's Pizza delivers good earnings. Wow, street leaning the wrong way into the report. Not much here. If you want a juicy target, 335, 336 for Domino's. That's only $7-8 away.
Wow, but it's a big move for Domino's. We could probably go to that one, up 10%. Bag holders up all over the place up there. Again, CPI is good. I'm not selling anything. So it's all going to depend on what that number is. I mean, nothing depends more. And you're just looking at charts and you're figuring stuff out here.
Yeah.
Lay off the charts for 17 minutes. Let's see. Let's see what this number shows. It's the only thing that matters. Let's see it.
Well, I shouldn't have got the headlines because we don't need them, says Dennis. Throw them out.
Show me the number.
Why don't we
Show me the number.
Why don't we just tune out and just sit here?
The one
That's what I'm
stock
doing, Joel.
we didn't talk about, which is interesting. So probably the most interesting stock was a stock not due to report. Applied Materials warned last night. And the market, AMAT, got hammered on it. But then they're like, nah, we've already hammered it. We kind of already knew it wasn't going to be good. We've heard from AMD. We knew there was nothing good happening. So you get a reaction that's like, well, it's down, but it's not down much. Now, again, the market is up this morning, but it wasn't down last night either with the market, not trading up nearly as much as it is now. So this goes to the theory that, hey, silver lining market, maybe some of these earnings warnings that come in the future, which are going to be coming, may not get hit as much as, we might think. So I don't know. Thoughts on Applied Materials not being down very much on an earnings warning?
Well, they slammed it hard. Algos, got a little carried away. Yeah, the Algos. They're all nervous, looking for their memo on the CPI number. They took it down to 73.52. We made a new low for the move just 2 days ago at 74.97. So if the bulls are out there in AMAT, they're going to support this thing at 75. They're going to make it support, and it's going to rally up. I feel if it turns off or there, you get a bad number. Maybe you'll see that pre-market low. Not much there on the monthlies to give you any comfort. So battle at 75 for AMAT. 41,000 shares have traded. So there's been some price discovery going on. But let's bring on Raghee so we can talk about the CPI number with Raghee Horner. Raghee, how you doing today? We're all just
pins and needles, butterflies in the stomach. We've got it all here happening, Raghee. Nervous Nellies covering this morning, it looks like. Thoughts here, Raghee? We're up into the number. What do you think? Hot or not?
Where's the tequila? I think that's going to help us deal with this.
Okay, maybe.
As long as it's not inflation.
I'll eat the worm.
Hot
or not? Hot or not?
Well, here's what's interesting. We think it's going to be hot. 0.3. I think we're looking at a 0.2. Previous was 0.1. So after yesterday's PPI, I think everyone's kind of ready for the quote unquote worst, which I'll tell you what, equities are up. I know you all already talked about that. You take a look at the S&P. Where we sit right now, still, last time I was on CPI and we had that big sell-off. And I think we kind of all agreed, we'll sit and watch, we'll react after. And I've been doing the same thing since the last time I saw you guys. So great to be here. I've just been day trading. And to me, people say, oh, you're actively day trading. No, it's the wonderful, blissful apathy of, I don't care what happens tomorrow. I hardly care what happens after noon. So that short-term
Amen.
time frame, sitting as you guys are, you're cracking me up, right? The secret squiggles don't matter. The technicals don't matter. Price doesn't even matter really at the moment. Let's see the number we get. If it's running hotter than 0.3, we'll probably see a sell-off. We'll probably see those March target rate probabilities tick up towards 5% or even beyond. Stonks will hate that. If it's 0.3 or less, I'm thinking we might hold the current lows. And that's where I sit.
I think that's a good synopsis. I think, you know, I'm doing the same thing. I've been saying it's pretty good trading, day trade this market, you know, but long-term investing has sucked in 2022, but trading's been pretty good. Trading's been pretty good. So I think we keep approaching it the same way, but I don't know if we get a light number here, does that change your opinion? Does it, if you get a light number, is it like the green light to like buy stocks and we are going to rally 200 S&P points? What are your thoughts?
I think the most difficult thing right now is to parse between what a tenth better or worse than CPI or non-farm or PPI or GDP now even means. It's mind-boggling how much movement we're seeing on even fractionally worse or better data. So I'm just going to the one place where my simple carbohydrate of a brain can handle the input, right? It's rate of change for the target rate probability. What are we expecting this to do in terms of mapping forward to what the Fed's going to do? And the best way that I know to do that is I key up that CME Fed Watch tool. Amazing. I'll look at those columns and I see which ones are taller. I mean, that's how simple I'm making it. So if it looks like come the end of the year, we're looking at a higher target rate probability. And March 2023 is the other big month for me. Are we again inching towards 5%, maybe 5.25%? And then I know, well, stocks are going to be upset. But think about this, and everyone listening, I'm not trying to be bullish. I'm not trying to be bearish. I just want to be opportunistic. And you mentioned such a perfect thing. It sucks right now to be an investor. But when we look back historically, it's those years or quarters or months where if we can slowly start to rebuild or build a portfolio, I'm talking to, you know, audiences of all ages. I love that you all have folks who are just getting started and folks who are further along the line. If you're just getting started, I know when I talk to 20, 30-year-old traders, they want to crash. We want to get into the market. You know, we want that great price. And that's one way to look at it. The other is if you already invested, think about what you would have liked to have bought 6 months ago, a year and a half ago. And that's what I'm trying to do, you know, keep that longer term. So I'm so glad you said that.
The guys I hung out with were so tough. We used to fight over the worm at the bottom of tequila. Since Dennis mentioned that, you know what? The sentiment, you know, is so, you know, like, what's your sentiment out there? I mean, it seems like, you know, with social media and everything, and you know, there's super bullish people out there, super bearish people out there. Everyone, you know, has an opinion. I mean, we're the sentiment. I mean, people, I think, we all want a good number, right? But wanting sometime is not good enough. Like how much emphasis? I mean, I know you look at your short-term indicators and stuff, but where are you? Where are you at in the whole sentiment issue?
On the whole sentiment issue, not that I'm trying to be a contrarian, and I'm not trying to be Pollyanna either. I just kind of go back to a fact that I read that just stuck in my mind, which is we are 31% smarter when we're just in a better mood, when we're optimistic. And optimistic does not mean bullish to me. Optimistic means I just have eyes wide open, as you guys do every morning. Where is the opportunity? So I'm not going to get caught up in the, oh, we're going to crash and go to 2020. Maybe we will, maybe we won't. I don't know about you guys. I don't get paid for making a target. I get paid for making trades, as would, I imagine, all of your listeners. They say, Rog, okay, someone goes on CNBC and calls 3,200, 3,400, 3,000. Good for them. They get paid to make comments. And I'm not bashing anybody, but and this is what I love about what you all do.
Yes.
We have to have an entry. We have to have a stop loss. We have to manage risk. And then we need a target. And I've just felt that throwing targets out there, that's 1/3 of the trade. And I'm not doing anybody any favors. So that's what I love about what y'all are doing. What is the whole plan? And have a whole plan, we have to be opportunistic. And so I'm day trading during the day till about 10:35, 11:30 Eastern. And I'm on my weekly time frames asking myself, hey, what sectors on the weekly are still above the 200 exponential. And there I'll start thinking about, let's start putting a little bit of money to work. And if it breaks the 200, I've got a pretty easy stop. And yes, I will put a stop at an investment. I'm taking it out for coffee. I'm not marrying it. And so I'm looking at it that way. And that's what keeps me opportunistic.
I think you made a really good point about the numbers and the 0.1 or 0.2 or whatever. I mean, the unemployment data. I mean, that was bad news. They hit the market because unemployment's still strong. I mean, it's such a way of looking at things, and and the market shifts its focus too. And I think going back over the years, watching different unemployment number used to be the money supply a long time ago. I mean, how long do you think this fixation? I mean, is this CPI and PPI number? I mean, is this it? I mean, is this not going to change for this for a long time, or what's your opinion on that?
I love that you mentioned money supply. So there's a really cool graph, and I'm trying to pull it up on my computer so I quote it right. But essentially, if you take a look at the BLS, the Bureau of Labor Statistics own data, and the Federal Reserve, and you pull up that M2 money supply that we can pull up. So you say from the St. Louis Fed, the FRED data, if we're following core CPI, we have to look at M2 growth. And M2 growth with about a 12 or 13 month sort of head start, it does map to where inflation's heading. So when M2 starts to drop, CPI will within about 12, 13 months start. So it's very lagging, obviously, but that's the direction. So when I pull up M2, it's still not dropping. So I'm not super optimistic about a significant downtick on inflation until I see that M2. And that's something you can look back to about 2017 and see, most especially all of it ticking up in 2021, peaking in 2022. And what we're looking for is come 2023, that M2 to finally, make a real impact on the CPI.
I can remember going back when in the before the Globex trading and stuff, everyone before the open, they'd say, what's the call? Where are we looking? And you would just look up at the bonds, and if if the bonds are up like 4 or 5 ticks, you'd say, oh, a couple handles higher. And if the bonds were down 4 or 5 ticks, you'd say, oh, a couple handles lower. But obviously, with Globex trading and the high frequency trading, it's all changed. What about? I mean, are you combing the ditches in any of this growth tech yet, or just the valuation still too high for you?
I'm not there yet. I'm really thinking much broader strokes. I want to see where, say, financials, XLF, consumer discretionary, XLY. I'm actually starting to nibble in XLP. So nibble means weekly time frame, 200 exponential. I know a lot of folks have been pointing out the XLU, saying, "Oh my gosh, shouldn't XLU be strong in an environment like this?" And they're getting alarmed for the sell-off and the disconnect. But that one's a tricky one. I want to get into some XLU as well. For traders out there watching that and sort of thinking, "Oh my gosh, the markets are broken, XLU selling off in the midst of risk aversion." Remember that in living in Florida, when Hurricane Ian hit the West Coast and it just annihilated, just that part of the country, that part of the state, and right up through the center of the state, the number one weighted stock in XLU is NEE, and that is Florida Power and Light. So until that settles down, FPL, good old FPNL. And we have, again, living in Florida, that's hurricanes are part of life. My husband and I joke, I've got my lights out before the power goes out trade. And that is short XLU and NEE and get long Generac. And that's anytime we have an imminent, cone of doom pointed at us, and not to be flip. I've been through it. And that's where I look at XLU. There's a slight disconnect, but I'm actually looking at XLU. There's a huge overreaction there because of what happened with that.
Isn't it good though that isn't this showing that that this safety trade is coming off here? The people that were hiding in these utilities or these defensive stocks. I mean, could this sell off be interpreted as maybe shifting back a little bit more to risk on or not?
I think that's a really good thought. up until you see that it's not happening in XLP. So when XLP and XLU are together, I completely agree with you, friend. But when you take a look at what XLU was doing up until September 21, which is when it showed that this hurricane was going to hit Florida and hit it hard, and then you look at the 23rd when it hit, and you look at NEE, 16% of the XLU is NEE, and it just absolutely tumbled, dragging that ETF with it. I think that's your disconnect, because otherwise XLP should be going with it in my mind. So I'm already in XLP. So I'm definitely talking my book. I'm in from about 67. And I would like to, once we get a nice stall pattern in XLU and NEE levels out, I'm going to go ahead and get into utilities as well.
All right. That's Raghee Horner, Managing Director, Futures Trader at Simpler Trading, trying to make it simple for us. Raghee, we'll let you crack those knuckles and fire up the keyboard. And great to hear your soft voice and your great input on the market. We'll get you back on again soon.
Thank you so much. I see all the comments, everyone out there. Thank you so much for the great comments. You guys have such a great crew. I enjoy being here with y'all. Thank you.
All right, Money. You were awful quiet during that one. I'm like, come on.
Yeah, I let you guys take lead. You guys were asking some great questions. I was here taking notes. I did have to say, I wanted to ask Raghee a little bit about that Quit book in the background. I saw the chat catch that one. There's like this book in her bookshelf.
What's the book?
It just says Quit. I want to find out a little bit about that one. It was like, if you can't listen to my voice and you're looking over here on my bookshelf, well, quit and take a look at my voice. I'm giving you the good stuff. But yeah, I think she's awesome. Really has a perspective, and I love that trade that she gave. Like, you've seen hurricane comes, Generac, but also shorting the utilities. I thought of Generac. I didn't think of shorting the utilities. Got to say, it's always great to get some insight like that. Whether the trade works every time, that's not the important part here. It's how the approach is there. Going long one side, short another. I like it.
The one guy we had on that had that fake background up in bookshelves, and he got me. I can't remember. That was a long time ago. But so Mitch, preview the number here. I'm gonna rearrange my charts to go to the 1 minute.
All right, let's give those numbers.
We're about to hit it. Hyped up.
Joe,
I'm not jumping the gun, folks.
Don't go crazy today.
I'm not jumping the gun. I'm going to be really mellow during
All right, let's start with first. Year over year, right? We're not talking core. We're talking just plain year over year. Is 8.1, prior 8.3. Of course, over, under, we'll see what happens. Let's react to the number. Now, we're also going to get month over month number. The estimate on that is 0.2. Prior was 0.1. What would be a bad number would be like a 0.4, right? And then we can talk about core CPI. Of course, core takes out food and energy. And that month over month estimate is at 0.5, prior 0.6. Year over year on core CPI that isn't watched as much, but still a measure that's given. The estimate is at 6.5 and prior at 6.3. So if you note something
breaking news.
Core CPI is actually said to go probably up. That's not a good thing, I think. But let's see what happens here. News starting to hit.
Wow. Am I quote stuck here? We just went to 36, 44, 75.
Ooh, I got a down action. I'm at 355.
Oh, we're huge. Huge drop.
Huge drop.
We crushed it. Look at that. It's hot.
I mean, the hopium in this market. I've never seen such hopium.
I know. Here
All
we
right,
go.
CPI month over month is at 0.6 versus 0.5. If there you guys get that first number there.
Everyone leaning the wrong way. All that pre-market action. Everything that happened last time happened again. Look at that.
I mean,
they popped it up, and they just slammed it. Unbelievable, right? CPI up 0.4 versus 0.3.
Yeah, I have here core at 0.6 versus 0.5. Then core is 6.6 versus 6.5. It is not looking good here. I still haven't gotten the year-over-year number. That's what I'm really looking for. I got the core ones. Anyone got the year-over-year number? Throw it up
Okay.
there in the chat.
All right.
But
Let's
not
see
looking
here.
good there. And
No, I mean,
I just think that, every data point has told us that inflation isn't going down, yet we just want it to go down
yeah,
here.
yeah. Yesterday, the PPI was
8.2 versus 8.1 estimate. So a 0.1 hot. That's not what we wanted to see. And also shows us if we're only going to go down from 8.3 to 8.2, is the Fed having any effect on inflation? Remember the comment that I talked about Meister earlier in the week. She said we are not having an effect on inflation. There's pretty much zero effect that we're having on it. I thought that was a little bit forward looking. I thought it was an important comment. And the Fed just keeps telling you they're going to keep hiking the rates.
They are. I mean, there's one thing, they were with the, they stuck with the transitory, right, forever, and they've switched, and they really haven't given you anything, anything to say that they're switching. The Fed pivot. I mean, they haven't said anything of that nature.
Yep.
Boy, I should have had got Blue on lined him up. I'll talk to Michael Murray because he talked about this for the longest time that it takes a while and it's sticky. I mean, wages and everything going up. It just doesn't turn around on a dime.
Well, I'll tell you what. The chat had it wrong too. They had they had over. So not bad. I think the chat got it right. I got to give you guys some props. I was about to hit you guys. 48% of you guys got it right with the over versus
Okay.
under. So 48% of the chat got it right. At least they were thinking it was coming in hot. And that's just how it is right now. It's a battle to get inflation down. The truth is, comments like this were giving me that insight. The exact comment, I want to quote it there. It was, there has been no progress on inflation. That told me enough this week. If she's saying that, she knows
they
the
were.
data.
The Fed heads were talking, man. They every time, and the market would get hit, on it. It looks like the people selling on the close. Boom, boom. Here, let me get my charts squared away. The people that were bailing on the close yesterday, they're looking a lot better than the people that were bidding it up in the pre-market. We talked about that last time. I mean, this is almost the exact same scenario. I think we were up like 70 handles when we came in. So let me change this to that makes it, that makes the pain almost worse. Now we are 100 and over 100 handles away from that high 36.45. Now you just got to think about the old support.
And now I think
major resistance.
350 is an area that I think, we could find a little bit of hold. That is a 50% retracement from the kind of the bottom, the really bottom of the pandemic towards the top. I get about 50% on that. So we're getting close to, I think, when we're going to hit some levels that even I think will start getting towards bottom. Of course, Jamie Dimon coming in and saying 20%
Jamie
lower.
Dimon too. Yeah.
3,200. We're at, 350 on the SPY. Will we get down towards that 320? I don't think we can get down that low, but who knows? We might give up all the pandemic right now from before the pandemic. If you look at, let's say, February 20th, 2020 to where we are now, we are only up 3.24% from before the pandemic. Just want to put that out there. Seems like we're going right back to that number. That would pull us back down closer to around 336, 337. So we'll see what happens if we get towards those levels.
I think I was looking at this over the weekend, and I think I discussed it on Monday. And the reason for concern was this is going back to November of 2020. And this was a big, coming out of the pandemic, Pfizer, with the vaccine. the market had come off the low. But that November of 2020, the market made a low at 32.10, ended the month at 35.90, and we all know what happened after that. The problems with, I mean, for me with the tech, it's a problem is that where's the support here? And to me, and this is the rolling front month contract. If you want to look at the S&P cash, I mean, it's still the same kind of story. The S&P cash with the low was at 32.79.74. With the rolling front month contract, it's different. So,
Hmm.
I mean, that's just you can say, oh, 3,500 or 3,400 or 3,300 or, whatever. Market's going to have to show that it can get some grip. All those earnings that came out today doesn't mean much now. Let's go take a look at some of these earnings stocks, and I don't know how they hold. I guess people are still going to eat pizza during unless no one's just trading it. That still can't be up 22, 24.
All right,
Let's
I'm
see.
doing some research here into the report. You guys can do the research also. I'll give you guys the link. I always like to give you guys links to get into the data itself versus the media, because I know, like myself, I like to look at the actual data. When I look into the data, it looked a lot better in energy. I can tell you guys at least that. If we take a look, energy index declined 2.1% in September after falling 5% in August. Gasoline index fell 4.9% over month, following a 10.6% decrease in August. Now, where we look at some increases is when we get into the shelter index. Shelter index continuing to increase, rising 0.7% in September. Rent index rose 0.8% in September. So rents being sticky, housing sticky, and inflation right there. So also you got the medical care index rising 0.8% in September after rising 0.7% in August. The index, of course, for physician services increased 0.5% over month, while the index for hospital services increased 0.1. So it looks like we're getting some increase in medical care now. And there was services on the rise. Transportation services went from 0.5 to 1.9. So seeing inflation in services, it just not enough towards the downside. Now, one thing that I can at least say is that utilities on piped gas services went down from 3.5 to 2.9, but still up, not going into the negatives. And that's what we need to kind of see.
Okay, let's go. Good information there. Let's look. We're off the lows of the session, but really not that, combing the ditches here. 35.10 and a quarter. That stands as your low. We'll see what that low is. Going into the pre-market session. At the end of the pre-market session, if the script plays out like it did last time, they did had it pumped up before the number. They hit it hard after the number, and then when the liquidity came in at 9:30, they kept on hitting it. So that was the scenario from last time. Domino's is still holding on to some of those gains. Was there any other news with Domino's with the earnings? I thought someone threw something in there. No?
I don't have anything special from Domino's.
Okay.
2.79 missing 2.97 estimate. Sales at 1.7, beat 1.06. I think to me that's more of an inline earnings report. Even though they missed on their EPS, they beat on sales. It's kind of like a miss and a beat. Doesn't look too bad. And I think Domino's a little bit recession proof. Why? Because it's a cheaper pizza location, right? You're not probably ordering from the fancy New York style pizza place down the corner, but you might be ordering your $6 pizza from Domino's, right?
Yeah, the dollar's getting hit too on this, down 52 cents, but that market doesn't seem to care about that. Your commodity, looking at your TLT, that's of course that's trading lower too. Crude, boy oh boy, we'll have to go do some homework and see where they were.
Oh,
Yeah, where they were before. Before the OPEC plus cuts. This is not good for gold. Higher rates that's took out support. Silver now well into the 18 handle. And the argument for Bitcoin as an inflation hedge, Bitcoin getting the beats here, down 815 at 18, wow, 18,280. And I don't know, should I just get rid of this Ethereum? I give the levels on it every day, and we don't really seem to talk about it much. But
Yeah, dollar I think is more of an important outlook too. But yeah, that number, the month over month, came in at that 0.4 versus 0.2 estimate. So looks like there you see an increase, right? 0.4, not a negative number. That's what we need month over month. We need to start seeing some negative numbers here, not 0.4.
banks. I mean, this can't be. I mean, we got to be except for the earning stocks. Help me find something that's trading up here. I can't. I mean,
Yeah,
there's
I think the banks are in for it though too, because I mean, they can report positive outlooks, but wouldn't the recession concern really start kicking in? I mean, they're going to continue raising rates. I don't
help
know. It's
dampen.
hard. It's a hard
Yep.
call on the banks.
Yeah. I mean, I bet you for loan demand, that's Bank of America. I guess what you guys got to be looking at now today is, where are those lows for the move? Because that's now going to be resistance, and wow, a long ways from 3,600. And it was just the price and folks, tell me if this happened on your system or not. We got the quick spike up, and then we were like locked at 14, at 36.14. And it was there for like much longer than, I don't know if that was just the quotes catching up, but I saw the 36.14, and then to me the next print was like 35.70 or 35.60. I don't know
It
if,
went
I mean, my
quick.
my system holds up really well under those kind of situations, but I just wonder if anybody else saw that too. Just someone locked it down and then everyone waited, but it was like that. Usually it just, you keep seeing the trades, but there we are, man. We're closing in on the lows of the session. That's 35.10 and a quarter. The earnings stocks that we talked about, they were in the green. Delta's still holding up. I guess people are still going to fly during rising rates. That did back off the high. Let me bring in the 24-hour market. Uh, Boom. That's L, not DAL. But that's backed off. That's still in the green. Make sure it holds. I mean, for these stocks too, you know, it's great that they got these, the good earnings, but just be careful because the market forces today are gonna probably dominate the price action. The top of yesterday's range, if you look right now, we're almost there, 29.44. You don't want them. You don't want that to go red on the session. And what else here? And then we mentioned Domino's. Domino's, they didn't announce a split. I thought someone put that in there, or maybe that's a different stock. But Domino's holding up. What kind of earnings we got? After the close.
All right, yeah, we can definitely take a look. Looks like the SPY is about to, it's close to making a new low. It's at 349.41. We'll keep a watch on what happens there. I'm seeing some of our leadership. Tesla's already down 3.5%, Apple down about 3%, and it's not going to be a good looking day. But let's talk about the earnings that do come up, and that's going to be Friday before the bell. You got JPM, right? You got Wells Fargo, Citigroup, Morgan Stanley, PNC, and one that's not a bank, right? You got UNH.
Yeah, that one is well, there's Morgan Stanley making a new low on the move. Someone's talking about Microsoft. I mean, they killed the generals. Was it a week ago or about 2 weeks ago?
Yeah.
And someone just made that comment here. I just want to see this comment. Iron Beam and sent an order to cover 35.90 and got a message. I've never seen order delayed or order pending, and the order didn't cover for 50. Yeah, there had to be some system lags on that too. That's
That's
I
why
don't
you
know.
want to have direct routing, right?
Mhm.
That's a perfect
There was
example of
no
a
system
moment.
lags.
Yeah, I
No?
didn't see anything
Maybe
on my end.
crappy systems. There was no. It traded smooth.
Yeah, it just goes to show you
I-
probably how you're getting your data. Because if there
Yeah,
was
I'm
some
gonna be
lag
back in a
there,
few minutes. It's wow, disaster. Wow.
yeah, disaster. And I think this is the day that maybe the Bulls truly get their decapitation instead of capitulation, decapitation. Because it seems like the Bulls were leaning towards the upside. I don't know if it was just that maybe some bigger traders were, kept shorting off of that 357, and then that's why I was getting a little bit of a bounce. And they were just kind of getting bounces, and then they hammered it here. But it didn't make sense that pre-market action, getting that little
Yeah.
spike. And then, of course, the UK, didn't help things by putting out a comment before we're going to get a major number that the UK government is considering a U-turn for tax cut plans. I mean, probably not the best timing there. But let's talk a little bit about UNH. What do you see on this chart?
It just got whacked. It's down $6, off from its all-time high considerably. I don't know if earnings really are going to matter in this one. I think 500 is well, here. Let's see what the former low was. 495.02. That was your current monthly low. So Bulls got to get this above 495 for it to hold, and right here. I mean, wow, this is not too much below $5 below yesterday's low at 98.21. So on any kind of bounce, we'll look at 98.21 as resistance. But just going back on, to looking at your monthly candles here, I just don't like this. Look at this area here. Uh, where is their support? Their support is at 449.70. And once you start getting into the, you like to call them the wicks, start to get into these monthly candles. I mean, I remember looking at Meta a long time ago, and I was thinking, oh, where's the next monthly candle? And you had to go back to 19, and you think, oh, it can't go down to 128.56. Well, it's $5 below there right now as we speak at 123.01. What was the next monthly low in that? 123.02. There you go, going all the way back to December of 18. So that's taking a look at gotta go to your longer term charts here. And what I'm afraid you're gonna see is that gap that you saw in the S&P from November 2020. You're gonna see the same thing. The same thing in your stocks.
How's the Bitcoin hanging in there?
Bitcoin down. It's spiked down to 17,810 and back up at 18,240. For those looking for that to be an inflation hedge, that's not working out. That's not
No,
working out very well.
that's beyond. I don't even think that you can even question it. That's like saying gold is an inflation hedge.
Yeah.
That's like saying that. Like, I don't think there truly is an inflation hedge. That's
Cash.
the hard part.
Yeah.
Cash. But then even then, that's not a hedge because you're losing out, right? So there used to be times where we used to think of things like inflation hedge. Is it truly an
There's
inflation
nothing now.
hedge?
No, when they sell, they're selling it everything. Do we have any Fed heads speaking up yet, or any comments?
I'll see what we have today from Fed heads. Now, one thing I want to know is you're really close to the June lows on Tesla. I think that's an important level to keep watch today. Of course, June lows of 207.67. You're at 208.55 today on Tesla. It could break that big time
level.
support. And if it breaks that big time support, I'm wondering, do we ever get back to the first split? The first split price is near 145. I mean, first we got to get through the 180s and the 160s, but I always keep an eye out on those splits to see if they're coming back for them.
Come back to that level. Just for you guys that were asking about Raghee's book, she sent us a message. Quit. She said Annie Duke is the author, and that it's a must read.
Oh, I'm gonna have to check that one out, especially on a day like today. You turn that audio book on and you leave it on repeat. Quit. Quit while you're ahead, man. And I felt like this was one of those days where it's tough. as a person that can talk about the markets, doesn't have to be in the markets or doesn't do this for 100% living like Dennis does. Yeah, I can sit here and be like, yeah, I want to be bearish. But I can tell you, it is very hard. If I had to trade today, or, if I traded exactly for my living, I'll tell you one thing. Today, you guys would have seen me
It's a
start
tough
turning
day.
gray,
It's
man.
it's a tough day for
not easy.
people's portfolios, and the other thing about days like this is that this is so discouraging to the newer generation of investors. I mean, I guess if you're looking at the longer term, I mean, this is no V bottom. This is no COVID V bottom. We got a lot of different things going on, a lot of different factors affecting this market. So, do you want to do some ticker time here, or I mean, not let analyst ratings are going to make any difference, but do we?
Let's talk about the digital world news. There was news from DWAC out there. So Digital World, Truth Social, Donald Trump's media company, up on the news that Google has approved the company's app for its store. I don't think it's up anymore, maybe, but who knows? Is it hanging in there?
It's up. It's trading up $1.16. I haven't heard much about what's going on with this. I mean, if you have some confidence that this is going to be coming through. I mean, where the floor is. The floor is $10. Got a pop over 18. Got to 18 and a quarter. 18 just kind of seems like a pesky level. You haven't you hit 18 the other day, hit 18.11. That was one day last week on Thursday, but fell right back down. So 18 is your level, the top of yesterday's range, 1648. Just hit a low at 0675, and there we go. We're trying to bounce 10 handles, but it seems like any of these bounces have not been over like 10 or 12 handles since they started to slam it. So we'll see if the bulls can muster up some energy here.
One chart that I was looking at that it seemed to me like some people were positioning to the upside because they have earnings next week was Netflix. And now it's starting to crack that support. I'm wondering if it gets back down to, when they, reported last time. There was lows of 162, still ways away from there, but looks like Netflix turning around.
Yeah, that 250. If you're looking at I mean, that's a ways away now, right? But that 250 just was tough on the monthlies. Couldn't get through it. If you're bullish Netflix, if you're bullish anything in this market, have something that's still off its June lows. Just take a look at some kind of retracement here. Let me it's kind of tight here to do it. You had a low back in June of 162. Let's call it a 90-point move, so 45, maybe coming into the $200 area, 200, 205. So that's quite a bit off the June low, and figure out your 50% retracement. So
recap the number for me because I haven't even heard the number.
That's
literally,
how you do it.
there's so much carnage. I can't even pay attention to anything that anybody has said in the last 24 minutes. What was the number?
Well, the number year over year came in at 8.2 versus 8.1 estimate.
Said it can't come
Prior was 8.3. So we only went down 0.1.
And we came above expectations. We couldn't come in hot. I knew it was hot just from like the reaction. I was like, you don't even need to know the number. I was like, I didn't have time to talk, look, anything. I'm just trying to hit bids. And it was like a lot more challenging than last time. The algos were really fast this time. I mean, really, really fast. So stuff is just absolutely hammered. I'm depressed for my long-term portfolio, which is 45% cash. I'm just like, holy. I'm depressed for like the retail trader that is like going to throw in the towel after this one.
This is why
it's a sad day for markets. We can all be laughing and rah bear, yeah, we're going lower, but this destroys so much. I mean, and obviously we live the markets, we're in the markets, but when you're in here and you're looking at this, now we've taken out the lows. It's just like, the retail trader, anybody that was buying stocks for the first time in 2020 and 2021, after this, they're just like, I'm done. I'm done.
Dennis,
So
I
you're
think
going to
that's
lose
a good
so
point,
many
though.
traders.
I think that's a point that you're making there. I think at least if you were looking for that moment for capitulation, this
Maybe.
could be that type. Because what Dennis just said there, traders letting go.
Maybe.
That's usually the moment when you see the flip, right? I mean, I'm not saying that it's going to be today, but
I don't have the guts
I'm
to call the bottom.
starting to see that the bulls are truly starting to let go. Once the bulls let go, we probably go down a couple more days, maybe a couple more weeks, but I think that's when you'll start getting the turn.
How in
We
the
really
hell
need to see them let go.
can the Fed raise rates this quickly and the inflation just doesn't even seem to go away at all? How is that possible? How long can it take? How backward looking is this data?
It's also what they can do, right? They can make moderations to the demand side, but are they truly affecting inflation? They're just doing demand destruction.
Yeah, but the demand destruction isn't happening, Mitch. I mean, we're not even seeing it. I mean, where is the money coming from? Like, where is, you would think, and I guess, you're starting to see some earnings, come off and some earnings warnings happening, but I don't know. I just look at this and just think, like, you had the hopes that maybe we could get a 7 handle. I really did today. Just like last month, just like the month before that. It's like, what are we raising rates for if we can't get inflation in check? You know what it's going to equal? You know where we're going, Joel. If we keep raising rates like this and we can't get inflation in check, where are we going?
Stagflation.
Stagflation. That's way worse than a recession. That's rising prices during a recession. Holy mackerel. The Fed did it by printing money relentlessly through everything. They were the printing press before COVID, and then they went crazy with it. And now you just cannot turn it back. I mean, I don't know what that means for stocks. I don't know what that means for, Fed pivots. It means no Fed pivot for the foreseeable future. 75 is absolutely probably going to happen. You could probably look at updated, odds
let's take
there.
a look at
Bring it up.
like
it's got to be like 100% on 75.
Yeah, I'll go ahead and I'll pull it up right now.
Bring it up.
Moving up towards
this is not a soft landing, and to Richard's point in the chat, this is not going to be, we might just tip into a recession. We are going to get hammered into a recession here eventually, like absolutely hammered, because they're going to keep going, and eventually it's going to hit all at once like a freight train, like boom, and there's going to be nobody buying anything. That's what's going to happen. Well, it's going to hit just boom. So, but I don't even know what to say. I mean, I don't know what to say. I wish I could just come on here and say, yeah, buy stocks and you'll be happy 6 months from now.
Yeah, you haven't said that in a long time.
I don't know if that's the case, Joel.
No,
how do you know?
No.
You don't know if that's the case.
No, you don't. I mean, we were banking on something, not banking. We were looking for something. It didn't come to fruition. You just gotta rewrite your plan, right? And move forward. Someone's saying Jamie Dimon's not a dummy. I mean, he came out, he sees what's going on with the in his own banking system. But is there anything, besides the earnings stocks? I mean, I'm just looking at everything. Can you find anything that's it's just a sell fest, right?
Everything is kind
of. Well, I got a couple.
What's that?
You use leverage bear side stocks because
some of the consumer staples are holding up well. Some of the consumer staples are holding up well. You still got Delta Green off the good earnings report, obviously. You still have some of the earnings stocks holding up, which, and that's to be expected. I mean, stock's up 9%, market falls 2%. The stock, the report's going to fall 3 or 4 from where it was, but it's not going back to red. So, those are to be expected. Good news for those companies that reported today and reported okay earnings, because they might hold up a bit. Do they come in and buy the dip? Maybe, but you know what just happened? We were teetering, in the Titanic analogy, we're teetering, bouncing along the 360 support. Oh, we get a rally. Oh, yeah, no, bouncing. And now, like, this is it, Rose. We're going down. And I mean, we just took out support hard. Technicians are all going to be like, the momentum traders are all going to be stopped out of everything. Well, the momentum traders probably were already, stopped out from that side. But I mean, the momentum traders aren't coming in here to save the day. They're going to say, no. JC Peretz is like, no, he's not buying any of this stuff. He might buy, whatever's relatively strong, but he's not coming in here. Christian Braun-Hertz is not coming in here and saving the day. So you've got to you got work to do. Could you bounce back? Could you Gil Morales V-bottom this, this day and get back to green? I just don't think so. There's so many money managers that are looking and going, WTF. Here we're raising rates, and we haven't seen even really any improvement whatsoever in inflation. So there's going to be people calling for a Fed pivot now, no matter what, because they're just going to give up somewhat, to UK style, just throw in the towel. We ain't beating it. Just stop raising rates. I mean, there's so many things to think about here. But it's just expected when you go to a store now that you're going to be paying more for products. How do you break that mentality? I mean, Pepsi passing it through. Certain companies are passing it through, which absolutely sucks for the consumer. It absolutely sucks for the middle class, and it's really hard on the lower class. It's really hard on those people. I don't know how you're going to pay the bills making $30,000 a year now, or $20,000 a year. So it's going to be tough. So yeah, I'm just sad for the overall markets here. Maybe we can bounce back, but I got to think even any type of a bounce back is going to met with so many willing sellers. So many people who are buying at 360 thinking, okay, these lows are going to hold. Get back to 355, 356, they're going to be selling. We get back to 355, 356, hell, I'm going to be selling. I'll try to bring myself up to 55% cash, maybe 60% cash. So I'm going to be using those rallies to sell as well. Maybe we can bounce. Maybe a lot of the bad news is priced in. We're trying to bounce here a little bit, guys, but it's ugly.
All right. Sorry we couldn't deliver better news, but you know what? We got to be here through the thick and the thin, and this is what the market market served up to us. So I'm gonna go comb the digits in the charts over at PreMarket Prep Plus, and I'll talk to you guys later on. Great job today, Mitch and Dennis. Cheer up, man. Cheer up.
It's a sad day for markets. I really want to be bullish. I really want to turn this thing around. And now you're like, it's your technical support. I mean, all the technicians are going to be ganging up on it. The only hope is Mitch's point. Maybe you get capitulation here today. Maybe this is like, I can't take it anymore and I'm selling, and maybe you turn it around. It's a very important day for the market. Like last CPI report, there was no way they were turning that around. It's where we were, though. Like we were kind of up into it. So we're at the lows going into it, really. I mean, besides the little BS rally that we had this morning, we're basically on the lows going into it. So that's a good thing. Maybe they can find a silver lining. Maybe this market can get some commentary from a Buffett or some type of vote of confidence or something. Maybe these earnings aren't going to be that bad. We're going to get all the bank earnings tomorrow. I'm trying to find a reason for the market to rally. I'm really reaching here, but it's going to be tough.
I'm going to go out on a limb today and at least have a little bit more of a bright side outlook, 50% to 61.8, somewhere between there. I see why Jamie Dimon called that 320. You can see that 318 lines up with kind of the perspective on the retracements. He's using probably some DCF models, but we'll see what happens there. Like always, Dennis, go do what you do best. Go trade, my friend. I'll go ahead and let the team know about a little ways how you guys can get outside of the craziness today. I will be releasing our premiere, of course, of the New York Stock Exchange with Jay Woods. Don't miss that. That's going to be at 10:45, team. Of course, go do some trading. Go kind of try to make some money back, right? Like always. But I want you guys to go ahead and stop thinking about the CPI. Stop thinking about the negative for a little bit. Come have some fun. That's what this video is truly all about. Sometimes we have a lot of education. Here, you'll get a lot more entertainment. Come check out our video of the New York Stock Exchange. Like always, right now, the public can't have access. So we did it for you right here. Benzinga, Chris Ketchy, and I, with Jay Woods on the New York Stock Exchange floor. Don't miss it. I know that you guys will have fun, and check it out. I'll give you guys a little sneak peek right here.
I don't know if you saw, above these pillars is a big statue. And it's, you know, it's like this Greek statue that you see, like, you know, of Apollo, but it's actually called integrity. And it's something that we don't take for granted when we walk through these pillars every day. You know, we have an old saying, your word is your bond. And that's how every handshake deal was done. And if you broke that word, guess what? You weren't going to be here very long. You know, you could not go back on your word. And so the fact that integrity is over these pillars is very important to me and the people that work here.
All right, team, don't miss that. Coming out at 10:45. I promise you guys will have a fun time watching this. There's one thing that I can definitely say. There's not many times where I can watch myself for that long, but I can tell you right now, I even enjoyed watching this. You guys can see from the floor how it is on an FOMC meeting. I'll set the scene. So the Fed FOMC meeting is about to begin, the meeting. You know, I start seeing the charts and I can see the volatility. I look around at the market makers and you can see it on their faces, the tension, the volatility, and the pure emotions. You can still feel it on the floor. Go check it out, team. 10:45. I'll see you there. Up next, we got live trading. Don't miss the action. If you guys want to see me do a little live trading before the New York Stock Exchange tour, come join us. We have a live trading stream. Lord Ryan, Zunaid, and I going to go ahead and get back into the market. I've had a rough week, but Zunaid's been killing it in the options game. So maybe you're an options trader. You want to check it out. Or maybe you like equities. That's what I'm here. And for anybody that likes those micro caps, we got Lloyd Ryan. He covers it all. I'll see you guys on live trading coming up next.
We'll be right back.